Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
What started off there could have an impact on European financials, and certainly we've already heard from Credit Suisse in that regard this morning. So we're keeping an eye on what's going on in the financial stocks as a result of all of that. European equity markets then opening for another week, just fairly flat actually on the FTSE 100 right now. We had, as I said, been seeing this futures picture that looked fairly optimistic. US futures, just to make the point once again, look a little bit more negative, but we did see stocks rally through all of those block trades in a general sense in Friday's session on Wall Street. US futures do point to the downside, but not by much. NASDAQ futures down by 6/7 Elsewhere, major markets in the US seen down by around 0.5%. The CAC 40 opening to the upside, up by around 0.1%. As I mentioned, the FTSE 100 fairly flat. The IBEX in Spain also fairly flat. So that's what we're seeing in terms of the overall market reaction. Still not getting an opening price on Credit Suisse, but of course we'll be watching for that. We do see UBS trading down by 2%. Some of the other banking names also a little bit weaker, and you wonder if they are down in sympathy or in uncertainty about where the fallout from all of this will lie. European equity markets then opening fairly flat this morning. The block trade story continues to be a focus for markets. Let's get some thoughts from David Stubbs, JP Morgan Private Bank Head of Investment Strategy. David, very good morning. Thank you very much for joining us. So we'll get your sort of more general thoughts in just a moment on where we head in global stocks, European stocks, US stocks, and the like. But just focusing in on European financial services. So many people seeing such an opportunity in European financial services right now, given various virus developments and the state of the markets. Do you still see that? Any short-term weakness today? Is that a buying opportunity?
Hi, Anna. Great to be with you. Certainly, as we see Europe reopen, we're absolutely focused on the cyclical trade and some reopening winners throughout Europe, both in the large cap and the small cap space as well. We are particularly focused on some of Europe's excellent companies in the mid and small cap space that are linked both to ongoing trends and to reopening. For the banks in Europe, we're still a little bit cautious relative to global financials. We'd like US or Japanese banks probably for incremental dollars here. We have been investing across the credit spectrum, though, for in banks, especially the AT1 space. Absolutely, that kind of extra capital that they have. We think when you look at the yield environment we're in, we find that as a really attractive way to add some kind of pro-risk high yield exposure in fixed income. But the equity at the moment, we've been standing on the sidelines.
You mentioned Japanese banks then, so maybe Europe not the focus, but you mentioned Japanese banks. I mean, Nomura down by more than 16% as a result of just this one hedge fund getting itself, this one family office getting itself into trouble. And now they're talking about a loss that might result from their exposure there. Does this give you concern, though, for the banking sector, David, as an investor in that sector with high expectations of what it can return? This a stunning example of how exposure to just one client can really derail things.
I think one of the difficulties of investing in financials is absolutely there are pockets of exposure to certain actors and entities within the broader financial ecosystem that are very hard to understand before we make an investment. I think the big picture on this is going to be a very small bump in the road. Yes, this is obviously a reasonably significant player, but I don't see the potential for systemic stress. And absolutely, I think at the moment markets are down in caution rather than in expectation of major issues. I think the broader picture, Anna, is one of underlying improvement in fundamentals across a range of financials. You see higher interest rates, steeper yield curves, recovering economic growth. And the big picture, certainly in US financials, has been one where this sector was shunned after the global financial crisis, just like technology was shunned after the dot-com bubble, and for good reason. Investors got burned, didn't trust whether they had whether this sector was going to deliver for them, and therefore stood on the sidelines. And I think what we see now, the big picture for banks in particular, is they've come through this huge shock, absolutely intact. Capital is strong, liquidity is good. The Fed announced only last week that dividends can restart in the summer. Similar announcements around the world. This is a sector not only leveraged to the cyclical recovery, but a huge yield play, both buybacks and dividends in coming years, and that's why we like it.
So that's why you like it. So looking at the financials in the places that you do like them, David, what is your expectation for what yields do, for how steep those curves get right now? Because what might be good for banks might not be good for other risk assets. How do you square all of that?
Yes, certainly we've been through the kind of easy part, as it were, of rising bond yields when they were very, very low, and the initial rise is a sign of recovery, of relief. And certainly if we were to see a very sharp move from here, given what the progress we've already made, there would absolutely be, I think, some difficulties in risk assets around that move. But big picture, if we see, I think, further progress on the vaccine front, further progress on pushing the virus out of our lives and out of the economy, I do think we'll see bond yields trend higher. Probably it's absolutely the case that, say, 2s, 10s could get to north of 200 as a spread. Maybe not this year, but certainly going into next year. So there's definitely legs to this trade that's focused on a steepening yield curve. At the same time, I think your point is well made that risk assets might be under pressure in terms of valuation. We've certainly entered the kind of second stage of an equity bull market. The first one is all about bouncing off the bottom, about discounting the recovery, and in that phase you see a big increase in valuation as prices rise before earnings. We're now in a period where we expect earnings to come through very strongly, double-digit growth all over the world, maybe north of 20% growth for 2 consecutive years in the United States, for example. And we expect that earnings growth to allow the market to move higher, even if valuations contract a little bit, and rising bond yields is part of that. So I think this is certainly an environment to understand where the drivers of your return are going to be, but also an environment where we do favor broad equity exposure still, buying dips and putting cash to work in client portfolios.
Okay, David, just breaking into the conversation briefly to mention what's happening with Credit Suisse. The share price of Credit Suisse just opening down by 9.9%, falling as much as 10% then on potential losses from a hedge fund. We heard earlier on one hedge fund, the defaults associated with one hedge fund having this impact on Credit Suisse, and they gave us some thoughts a little bit earlier on how substantial this could be for them. And of course, we're coming up to the end of the first quarter, and so these US hedge fund related losses could be substantial in the case of Credit Suisse. So we're keeping an eye on the banking sector more broadly. David, stay with us. David Stubbs, JP Morgan Private Bank, Head of Investment Strategy. More coming up from David in the next part of our program. Coming up on the European market open, England's lockdown eases and Biden is set to lay out plans for his economic recovery plan. Up next is your week ahead. More on the markets. That's next. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy, and we need companies to step up.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Welcome back to the European Market Open. 10 minutes into our European equity trading session, and European equity markets are moving slightly to the upside. US futures actually pairing their losses, still down around 0.5% on NASDAQ futures, but still things moving in that generally slightly more optimistic direction despite everything. Let's talk about everything with Bloomberg's Danny Berger, who's here with a look at some of the movers this morning. Danny.
Yeah, increasingly everything this morning is that big block trade. Well, Credit Suisse falling at one point this morning more than 10%, paired a little bit of those losses, but still down significantly. Warning this morning about losses tied to an unnamed hedge fund. Of course, this comes at the same time as family office Archegos facing a margin call, according to sources, and unwinding some of their trades. Maersk also down today. It was one of the stocks that had actually risen with the ship stuck in the Suez Canal because of those rates for shipping goods went higher, but with the ship finally looks like it will be unstuck. We're seeing Maersk start to give up some of those advances. Finally, leaving you with a little bit of deal news. Clover, the Swedish real estate company, it was offered to be bought by Quorum, who already owns a lot of the shares, but in this case says it will buy the rest of the shares it does not own to make this acquisition. It's about a $2.2 billion deal. Now, let me quickly give you a look at the macro picture. We're not seeing a ton of stress necessarily from that block trade. It does seem to be that the yield picture perhaps is what's causing more of the pain. We did have some higher yields at one point. It's now moving slightly lower. And of course, the oil picture moving lower with, again, that ship finally refloated in the Suez Canal. So at least one dramatic story coming to an end here, Anna.
Yes, that partial refloating anyway. We'll see how long it takes to really get the traffic moving there. Danny, thank you very much. Danny Berger with the stocks that are on the move this morning. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. The quarrel over allegations of human rights abuses in China is growing. Beijing is bringing in retaliatory sanctions on individuals in the US and Canada. The fallout is also spreading to the corporate world. In some parts of China, landlords are closing H&M stores. That's after it put out a statement expressing concern over reports of forced labor in the Xinjiang region. Video streaming service Bilibili is the latest US-traded Chinese firm to disappoint on its homecoming. Shares fell on its debut in Hong Kong amid a global sell-off in the country's tech shares. In his first interview with international media, the firm's CEO says he expects explosive growth in online video.
I think videoization will be a major trend of internet industry for the next 3 to 5 years. I believe all internet users will become video users. That means the market will be in ultra-high-speed growth for the next several years.
That's the Bloomberg Business Flash. Anna.
Laura, thank you very much. Laura Wright here in London. Let's have a look at some of the events that we are keeping on the radar for you this week. From today, England begins the next stage of its lockdown easing. 2 households or groups of up to 6 people are now able to meet outside. On Wednesday, Joe Biden is expected to lay out more details of his economic recovery package. The World Trade Organization is scheduled to issue its annual trade growth forecast. The yearly update will come after a sharp slide of about 9% in 2020. 2020. And on Thursday, OPEC and its allies will hold their monthly output meeting. They are likely to raise quotas as lockdowns in Europe continue to weigh on demand. Plenty to talk about then with David Stubbs, JP Morgan Private Bank, Head of Investment Strategy. And David, where do you see oil prices heading from here? We heard there about the OPEC Plus expectations for this week. Clearly, oil prices have been moving because of that blockage in the Suez Canal. What is your expectation as to how we trade oil from here?
Sure. Obviously, we all hope that the blockage in the canal is a temporary thing, and we move past that. And I think we see a bigger picture when we do of rising demand thanks to the reopenings and recent supply discipline, both from OPEC and also in the shale patch as well. So we think oil prices are probably going to grind higher throughout the next 9 to 12 months here, probably a peak early next year. I think that it shows, a couple of key structural changes in the oil market. For example, on the shale side, simply the capital environment for these companies has changed. Such has been the volatility of the oil price, such has been the financial distress in some of the players. I think the financing options are simply not as easy as they were. We need to see a lot higher prices, a lot steeper futures curves to actually bring some of that financing on and bring on some of that production in the shale patch. And I think also OPEC has really come into its stride in terms of showing some discipline. I expect any kind of increase in production this week to be modest. And although we still have reasonably high inventories, the pace of reopening, I think, is quite fast. So we expect oil to probably grind higher from here.
Okay, and thinking about oil makes me think about inflation, David. We've been hearing from Patrick Harker, the Fed president from Philadelphia, of course. Let's just have a quick listen to what he had to say.
We are seeing in certain pockets, like manufacturing, their supply, they're seeing price pressures. But what they're not doing is planning on passing much of that along to their consumer, to their end customer. So I think it's the inflation story is complicated. Our goal is to have it hit above 2% this year. Our forecast is around 2.1%, but we don't see it running out of control.
Patrick Harker there making the point about pricing power, I suppose, David, and that's a crucial element of whether we get to see inflation is how much pricing power companies have. I wonder what your thoughts are on just how high inflation stays elevated this year, because most people expect there to be a spike up in inflation, of course. It's just a question of how long it lasts and how high it goes.
Well, exactly, Anna. Yes, it could absolutely get as high as close to 3% for a few months in the middle of the summer for sure. We'd expect it then to slow down quite significantly as we go into the end of this year and into next year. I think the point that the Philadelphia Fed chief made is a very, very good one. This has been the story not just of this recovery, really, but for the last 10 to 20 years of, especially in manufacturing, elevated starting margins thanks to globalization and technology, meaning that any kind of input shock, be it energy, be it any kind of other raw material or wages or anything really, they tend to take that hit on margins and not pass it through. Partly also because they believe that the environment is so competitive that they don't believe they can make price increases stick. And once we get past some of these short-term supply disruptions, as we still see the tremors from the COVID shock shake through the global economy this year, that picture is going to be reestablished. One of very difficult pricing environment for both goods and service companies. And we think that a lot of the cyclical slowdown that usually comes after a recession, because the damage of the recession is still ahead of us in rents, for example, in wages, for example. And so really, we wouldn't look to see a significant sustained uptick in inflation until 2023. And that's why we think the Fed's going to be on hold until 2023 and probably be pretty gradual until then as well.
And one of the factors we're also watching, so oil prices clearly link into the inflation conversation, but also shortage of chips, David.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Bloomberg, but on Bloomberg Radio, 9 a.m. UK time. That's where I'll be heading at the top of the next hour. Coming up on the programme, Credit Suisse sinks on a potential big hit from a hedge fund. More on that block trade story. So gripped Wall Street on Friday continues to ripple through markets from Tokyo to London. That is next. This is Bloomberg.
You see the price action and you wonder, okay, is this fundamentally driven or is this something else? And it seems like this is a big case of that something else.
I think it highlights the risks that people haven't seen on positioning, and it highlights the concentration in the market and also some of the leverage in the market, particularly the hedge funds. So we're going to have to be careful.
You might see some either copycat moves by some funds on a similar basis, but we don't feel that we're at an inflection point at this stage.
I would say if you're your typical average investor, your retail investor, I would stay out of this for the next couple of days.
Those were some of the reactions to the unprecedented $20 billion in trades linked to Archegos Capital Management. Banks from Credit Suisse to Nomura this morning are warning about significant losses tied to an unnamed hedge fund client. Multiple lenders are now tallying their exposure to a fire sale by investment firm Archegos Capital. Danny Berger has a rundown of what we know so far. Danny, first walk us through the banks that are likely impacted from this. What have we heard?
Well, as you say, we know Nomura and Credit Suisse have issued statements this morning saying that because of a hedge fund client, again, they're not naming that client, they're likely to face significant losses. But we do know this comes as Friday there are a bunch of block trades from Goldman and Morgan Stanley tied to Archegos. So it's likely that there is some, if not the relation here with these banks. But I also wanted to point out some of the other banks that are selling off today, Deutsche Bank and UBS. You have to remember that Bill Hwang's family fund, Archegos, had been highly courted by a lot of these banks for prime brokerage services, to the point where Goldman had dropped Bill Hwang after a securities fraud, a wire fraud charge, and then they had him back realizing that they were missing out money. So it is possible that other brokerage accounts also are caught up in this fire sale. So yes, the top two falling more than 10% in the case of Nomura. Credit Suisse just about 10%, but it does seem we're seeing other names perhaps get caught up in this falling in sympathy.
Yes, I spoke to David Stubbs from JP Morgan Private Bank earlier on. He said this doesn't have the potential to be a systemic stress, but certainly when you see banking stocks moving as much as Nomura did in one session, a lot of people are asking that question. What can we see then in the US session? US futures have been, well, I was going to say they had been improving, just worsened again. NASDAQ futures certainly down 0.7% right now. But what are we looking for then at the start of the US trading session around some of the names that were hit so hard, some of them down more than 25% in Friday's session?
Yeah, the probability that we see this be really widespread, so for example, impacting the entirety of the index, I don't think a lot of these stocks are big enough to drag down the entirety of the US session. But you look at a company like GSX, this is one of these Chinese ADRs that have been caught up in this, last week falling more than 50%. So if other hedge funds have exposure to this, they could also have to issue margin calls, so putting more pressure on these equities, Anna.
Yeah, absolutely. So when they're faced with margin calls, interesting to see where all the dust settles from that, and that's the reason we watch those European banks, as you pointed out. Danny, thanks very much. Bloomberg's Danny Berger with a run through of what we know and what we're likely to learn around those block trades. So dominated market trading on Wall Street during Friday's session, and we continue to focus on it. Coming up here on the program, ship afloat, just about. The first step in freeing the Ever Given has been achieved. Work continues through the morning, though, to reopen the Suez Canal. All the details on that story coming up next. Oil prices losing a little bit of their steam just this morning, down 1% on Brent. This is Bloomberg.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open, half an hour into our European equity trading session. And European markets at the top line look flat to positive, don't they? When we dig under the surface, though, you can see all is not well necessarily for the financial services sector. Let's go to the sector breakdown, the GRR view of the Stoxx 600 this morning, and we can see what's going on these markets. You can see that financial services is by far and away the biggest losing sector, down by 1.2%. Travel and leisure also continuing to focus on one of our other big narratives, ongoing narrative around the delayed rollout of vaccination across Europe. More on that shortly, coming up in this hour. We're fairly evenly divided, though, aren't we, in terms of sectors to the up and the downside. Food, beverage and tobacco making some gains, but as I say, financial services the biggest losing sector. All of that very much to do with our top story, which is the aftermath of the Bill Hwang family office, Archegos, getting itself into trouble, and what that does to various players in the banking space who had maybe aided that particular family office in its activities. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. German Chancellor Angela Merkel is threatening to assert federal control over measures to tackle the pandemic. Under the country's federal system, leaders of the 16 states have direct authority over health and safety rules. But now the Chancellor may seek a new law to give Berlin more powers. The US vaccine rollout is kicking into a higher gear with a third straight day of over 3 million vaccinations. Today, England is taking additional steps to ease its lockdown with up to 6 people allowed to meet outdoors. But the number of global coronavirus cases has risen for a 5th straight week. Myanmar has seen its deadliest weekend since the coup on February 1st. As of yesterday, at least 459 people have been killed since the violence began, and over 2,500 have been detained. The military crackdown has drawn strong condemnation from around the world. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London with your First Word News update. Now, the giant container ship blocking the Suez Canal has been partially refloated almost a week after it ran aground. Egypt says it aims to reopen the waterway today as more than 450 vessels are stuck in the logjam. Earlier today, ADNOC's Director of Marketing, Sales and Trading, Khaled Salmin, told Bloomberg the risks of the blockage to the oil markets are minimal.
We don't have anything in the Suez Canal. And from that perspective, we do follow this closely because at the end of the day, it is our mandate to ensure that all our customers have a reliable source of energy. And if that is required that we step in on behalf of other customers that have cargoes there, we will assure that we will make sure that we provide whatever support is needed.
What's the biggest market risk from the Suez blockage?
I think it's mostly on the commercial side, containers, bulk. The exposure to the oil markets and the products market, I believe, is minimal.
Joining us now is Krian van Beek, Odin RVB Tank Storage Solutions storage broker. Krian, thanks very much for coming to talk to us here on the European Market Open. So from your perspective, from the diverse range of customers that you service, what is the biggest impact that you've seen on your customers as a result of this blockage in the Suez?
Yeah, we have the question from especially customers with smaller parcels on board of parcel tankers, which ask us for a solution to store product which was originally destined for the Mediterranean Sea, for example, or they try to avoid going into the Mediterranean coming from the north, or ships with waiting to pass the Suez Canal. They asking us to find solutions for the stocks they currently have in areas on either side of the canal. So there is an impact on for the storage market that bulk cargoes need to find the different sourcing or find a home which is currently on board of a vessel and has to be stored in a short tank somewhere.
So some tank storage is going to be used that you wouldn't have expected to be used in the region, I suppose, Krian. Other tank storage is going to be depleted. Those stores are going to be accessed by customers when you maybe weren't expecting that. Is this having a knock-on impact further down the supply chain to customers of energy at this point, or is that not happening yet?
On the full cargoes, we don't see that much of a need for storage. So on the oil market, the ships carrying the oil products, they normally have one cargo on board. And for those ships, they either deviate, so they sail around the Cape. So there is some delay in arrival, but it is not a big impact. But on the smaller and on the food grades, on the palm oils, on the different products, the impact is bigger. They have more stops on the way. They go to different ports, and they are more suffering from a delay like this. So you will indeed see that the tanks in like Rotterdam, they will be emptied quicker. So the safety stock which was in the tank is being used currently. Altogether, the Suez Canal has a logistic impact for sure.
Does this tell us anything, Krian, about the resilience of global energy trade? Do we need to build more resilience, more margin for error into the system?
There's a big safety stock system anyway. So some countries have 30 days, other countries have 60 days. So in that respect, we are covered, and we don't need to use the safety stock yet. So I don't think there's an immediate urge to change that.
Okay, so we have some of that room for manoeuvre. How long do you think it's going to take to have things running as normal through the Suez Canal, Krian? Given your experience in this industry, all of the customers you're talking to, we seem to have got a partial flotation of the Ever Given. We're seeing some of that effort over the weekend in our images now. We've got a partial flotation, but how long will it be between now and actually seeing free-flowing traffic through the Suez Canal?
The ship currently waiting to pass, they will have at least 2 weeks to a month delay altogether when this whole mess is cleared, once it is open again. But other ships which are at the deviation point, they make sure that they sail around the Cape. So then the delay is only like 10 days altogether. So I don't think there will be a long-term delay on cargoes or ships. So, but only the ships currently waiting in line, they are suffering most from it.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Joseph Janser, it's Anna Edwards. Can you hear me?
Hi.
Ah, you can. Excellent. Thank you so much for joining us. We're just in a commercial break, so things are a little quiet right now, but we will be with you shortly. Welcome back to the European market open. 41 minutes into Europe's trading session, and things are a little mixed. The FTSE 100 down by around 0.1%. The banking sector certainly being weighed down by talk of the impact of the collapse of a hedge fund and what that is going to do to various banking stocks or banking businesses that may have extended or allowed some leverage by that hedge fund. So Nomura Holdings warning of the impact on its business. That stock down by 16.3%. Credit Suisse also out with a statement with regards to a US hedge fund, and neither Nomura nor Credit Suisse naming who it was, but many people making the link, of course. Credit Suisse and Nomura, you can see, substantially hurt by the effects of this. Elsewhere, also trading to the downside, Deutsche Bank and UBS Group. A lot of focus on where else we might see impacts, and the sector as a whole under pressure as a result. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Hong Kong is said to be targeting its first SPAC listing by the end of the year. Sources tell Bloomberg it's expected to have its own blank check listing framework ready in June. It's racing with rival Singapore to become the first Asian hub to green-light the investment vehicles. It plans tighter rules than are currently enforced in the US. Chubb may have a competitor in its $23 billion bid for Hartford. Sources tell Bloomberg that Allianz is considering making a counteroffer, discussing its options with potential advisors. But we're told it's reluctant to enter into a bidding war with Chubb. No official comment yet. The quarrel over allegations of human rights abuses in China is growing. Beijing is bringing in retaliatory sanctions on individuals in the US and Canada. The fallout is also spreading to the corporate world. In some parts of China, landlords are closing H&M stores. That's after it put out a statement expressing concern over reports of forced labor in the Xinjiang region. That's the Bloomberg Business Flash. Anna.
Thanks very much, Laura Wright, with your Business Flash here in London. Let's just go to Hong Kong in the sense that we have some breaking news coming through from Hong Kong. Hong Kong to reopen beaches and swimming pools to keep bars closed. This red headline across the Bloomberg just crossing now. They're saying bars, nightclubs will remain closed. They're increasing capacity on theme parks. So a number of changes coming through in Hong Kong. So we'll keep across that story. They are reopening public beaches from Thursday, as I mentioned. And the reason I mentioned this is we're now going to have a conversation about how life continues to adjust to coronavirus and the rollout of vaccines in Europe. The German Chancellor Angela Merkel is threatening to assert federal control over measures to tackle the pandemic. Under the country's federal system, leaders of the 16 states have direct authority over health and safety rules. But now the Chancellor may seek a new law to give Berlin more powers. Meanwhile, the EU is blocking exports of AstraZeneca's COVID-19 vaccine if the drug maker can't meet its commitments to the bloc. At least it has put in place the ability to block them. Internal Markets Commissioner Thierry Breton says the company has pledged to deliver 70 million doses to the EU in the second quarter, but so far it's handed over only about 30%. Let's focus on Europe's fight against the pandemic and the speed of the vaccine rollout. Joining us now is Josep Janser, European Centre for Disease Prevention and Control, Head of Emergency Response. response. Josep, very good to speak to you today. We've heard a lot, of course, about AstraZeneca and a lot of anger from the EU directed towards AstraZeneca. I wonder if we can move the conversation into areas where we can see some progress, where the levers of control are at Europe's disposal, if you like. I wonder if you can tell me, what can Europe do? What is Europe's plan to try and increase vaccination rates, to encourage more people to become vaccinated?
So there are several approaches and strategies that have been followed by ECDC. One is we regularly display and update our guidance on the vaccine COVID-19 rollout overview and what are the approaches by the member states. And of course, we are encouraging to keep as much close as possible to the strategies that have been defined by member states. We are also organizing meetings with the National Immunization Technical Advisory Groups, the NITA groups, where we discuss the situation overall, all over the world, but also at the EU, EA member states, and are facilitating the information that we have through the vaccination rollout that is in the ECDC webpage. So once ECDC mandate, it's focusing on advising, supporting, and trying to harmonize the way that the vaccination rollout is done in member states. We keep with that and we try to support them as much as our side.
Josep, of course, you're trying to harmonise things. We've seen some divergence in treatment, certainly of the AstraZeneca vaccine around Europe. I wonder if European regulators, if you feel you have all the data of real-life rollout at your disposal, are your country members managing to learn enough the lessons from Israel, from the UK, where the vaccine rollout is ahead? Are you getting all of the data that you need to enable the rollout to take place in Europe?
We have currently quite good data from all the EU, EA member states, so that has been achieved and it's still improving. Regarding to the information from third countries, as you mentioned, in that case, Israel and currently the UK, we have enough information. We have information, but sometimes it's not the same level and the same amount of information. In terms of lessons learned, as you know, and as everybody knows at that stage, this is an ongoing process where we are trying to understand which is the best way to go through to this vaccination rollout. Of course, not everything is in all member states' hands because that depends also on the vaccine availability, of the distribution. So there are so many factors that are playing very important roles in this vaccination rollout that what we are trying, as you mentioned, is to facilitate as much as that information in order for them to be able to do in wherever they have some weak points to improve them.
Do you think, though, Joseph, that some European regulators have acted with too much caution, an abundance of too much caution with regards to the vaccine rollout?
Can be. I mean, I cannot say that for sure because of that sometimes.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
answer. The technology landscape has gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The different companies and the different member states in terms of testing, in terms of proof of vaccination, and in terms of having gone through the disease.
Josep, thank you very much for joining us. Josep Janse, European Centre for Disease Prevention and Control, Head of Emergency Response. Thank you very much for bringing us your thoughts on the vaccine rollouts across Europe. Coming up on the programme, oil slides after the ship blocking the Suez Canal is partially refloated. We discuss more about the impact on the markets with Bloomberg's Markets Live. Laura Cooper, she joins us next. This is Bloomberg. Yes, sure. Yep, sounds good. Hi, Laura. You there?
Morning, yes.
Hey.
We think that camera 2's cable has to go over the podium, podium has to come in. So the cameras have to go out, then the podium has to come in.
Okay, awesome. Nice. Nice. Welcome back to the European Market Open. 53 minutes into a European trading day that has been dominated by a couple of themes. One of them is the clearing of the Suez Canal and the anticipation, at least, of that. And we see oil prices weaker as a result. The other has been what's been going on in the banking sector. The overall picture for equity markets has been fairly positive, flat to positive, as you saw from that graphic. For European equity markets, US futures point to the downside. But this is the picture for the banking sector right now. Nomura Holdings flagging some link with a US hedge fund that everybody now believes to be, of course, Bill Hwang's hedge family office. The Credit Suisse flagging a connection earlier on. That stock is down by 13.3%. The words of Credit Suisse a little bit earlier on are highly significant and material. It could be highly significant and material to first quarter results, such as the scale of the impact on Credit Suisse. Deutsche Bank and UBS both also trading down in sympathy, but we are getting some lines out on Deutsche Bank today. That stock down by 4.7%. As Deutsche Bank has some exposure to Archegos Capital, the family office of Bill Hwang. As those trades unwind, we understand. The Deutsche Bank losses, though, seen as much more limited than other banks, so say our colleagues in Bloomberg News. So interesting to see the effects that is having on the banking sector more broadly. Let's get thoughts from Laura Cooper, Bloomberg's Markets Live macro strategist. Laura, good morning. Coming into today's session in Europe, the thoughts were Has this all finished? Are we done with this? No, it seems, is the answer to that. And where does the pain fall in Europe? And we're beginning to learn a little more about that.
Well, as you mentioned, we are starting to see that feed into European banks, which is perhaps not surprising given the size of the moves that we've seen for some of those individual companies that are quite unnerving to investors. But ultimately, I do still think that this is more of a contained idiosyncratic issue for certain pockets of exposure in the market and not really a systemic risk. Yes, it does highlight overstretched leverage, these concentrated position risks, and really fragile liquidity in pockets of the market. But ultimately, I do think, this is not really a bigger macro story that's going to feed into broader indexes, at least at this point.
Yeah, it's really interesting to see, though, the fragility of some of these banking models to exposure to one client. Incredible, really. Another big story, of course, is around the oil price and the attempts to clear the Suez Canal. What's the latest there in markets?
Well, we are beginning to finally see signs that, yes, this tanker is going to actually be freed and begin to see these global trade flows resume. But I think ultimately for the oil picture, the reason why we're potentially not seeing oil come under sharp pressure on this news is because the moves to the upside.
Great, thank you.
I'll check on the monitor. If it needs bronzer, I'll bring it out.
Great. Hi, Shuli. Hi, Danny.
Hello.
Shuli, thank you so much for joining us. We're just starting the show in a couple of minutes.
Thank you.
Okay.
Hi. What's up? Oh, thank you. not sure, sorry. Still on a break now.
It's one thing to refloat the ship, it's another thing to completely clear the canal for traffic.
The exposure to the oil markets and the products market, I believe, is minimal.
We have equipment and capacity that most companies don't have, and we're seeing what we can be, what the best we can be.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the early edition on this Monday, the 29th of March. I'm Francine Lacqua in London, and here's what's coming up on today's program. Margin call. Bloomberg learns that Tiger Club, Bill Hwang's family office, was behind the unprecedented $20 billion move in trades on Friday, while Credit Suisse slumps after saying it faces losses from unnamed hedge fund clients. Back afloat, the container ship blocking the Suez Canal has been refloated. Well, Egypt says it hopes to have ships passing through the waterway again by today. Plus, Britain's lockdown measures ease today, with up to 6 people from 2 households allowed to meet outdoors. This, as a country, hits 30 million vaccinations. So a lot going on today, and the mystery behind Friday's $20 billion block trades is starting to unravel. Well, Bloomberg has learned that the family office of the former Tiger management trader Bill Hwang was behind the unprecedented selling. Archegos Capital Management was forced by banks, including Morgan Stanley and Goldman Sachs, to cash out of its position on companies ranging from Chinese tech giants to U.S. media conglomerates. Now that sent shares in those companies slumping, with Viacom down more than 50% on the week and Tencent Music down by a third. This morning, banks from Credit Suisse to Nomura are warning about significant losses, though they have refused to name the client. Well, joining us to discuss all of this is Danny Berger. First of all, Danny, good morning. How much do we know about whether the selling has ended or whether it hasn't?
Well, Francine, it's become clear that increasingly more banks are caught up in this. Just a few moments ago, we learned that Deutsche Bank also bracing after this Friday fire sale. And part of the key here is when we saw the statement from Credit Suisse, who again didn't name the hedge fund, but this does come after that fire sale. Bloomberg sources say is linked to Archegos, says that they are in process of unwinding these hedge fund positions, meaning that the sale is not over yet. And we did see Morgan Stanley and Goldman Sachs be the first to bring these big block trades to the market. And for funds, or rather banks, prime brokerages accounts that had waited, they could be under pressure. So here's the pre-market print on Goldman Sachs and Morgan Stanley. Again, as I say, they were the ones to do those unwinds on Friday. So they're seeing a little bit of pressure, nothing like we're seeing with Credit Suisse down 10%. I think the key here is if banks do have Bill Hwang rather as one of their clients, just how exposed are they? That's really going to determine what sort of pain these banks see individually.
So, Danny, what about beyond Archegos? Could any other hedge funds be swept up in these margin calls?
It's certainly possible, because Archegos likely isn't really an outlier. It's probably more representative of what most hedge funds have done. We know that Tiger Global, for example, has a really big position in this stock, GSX, which was one of these fire sale shares. And FT also reporting today that another Tiger Cub also is linked to some of these selling. So we have a pre-market print on a few of these companies, not a ton of reaction. I mean, it is down another 5%. I think in terms of a wider market reaction, we might not see that, but I'd still keep an eye on some of these names throughout trading, because it might be an opportunity perhaps to step in and buy if you like the fundamental story, or if more big block sales are likely to hit, we could see further pain in these shares, Francine.
Thank you so much. Our Danny Berger there with some of, well, the market moves that we're bracing for also at the open of the U.S. markets. Now, the selling may not be over too soon. Well, Bloomberg Opinion's Shuli Wren warns of more pain ahead. You can read her latest column on OPIN Go in the Bloomberg terminal. Shuli joins us with the very latest. Shuli, first of all, congratulations on a wonderful column. Where does this end? Is this just the beginning of something that could turn uglier?
Well, thanks so much for having me on the show. I think that the problem is just like Morgan Stanley and Goldman Sachs, they were the American banks that, in a way, front-ran the European and the Japanese banks. They sold first, right? And then we know Nomura and the Credit Suisse, they're still in the process of selling. And unfortunately, Bill won some of his stock positions, especially in the Chinese internet companies. They are kind of tricky to sell because they're not like your Tencent or Alibaba. These stocks are more niche and they're not cheap. They never have quite a bit of a long-only institutional investor backing. So I see that these banks will have a tougher time selling those trades.
So Shirley, will it actually change? I mean, it's really quite amazing how, everything is interconnected and just kind of also reminds us on, some of these big clients, how important they are. Will it change the way some of the banks or some of the margin calls will operate? Or is this very idiosyncratic just because of Bill Hwang's family office?
Well, Bill Hwang, this is not the first time he got margin called. After the Lehman Brothers bankruptcy, he got short squeezed on the Volkswagen trade in October 2008. And back then, the big banks were giving the basically big hedge funds too much leverage. So that was basically 12, 13 years ago, and we are here again. So I don't know. I hope the banks get to improve their compliance issues. Right now, it seems to me a mismanagement problem. The prime brokerages, the front offices basically overran the compliance and the risk department's decisions. And they gave Bill Hwang so much leverage, and now they're basically having to soak up the losses.
How much more pain, Shirley, could we see? And this is the premise of all of your opinion piece, and you were just talking about it when we started this interview. How much more pain could there be ahead, and would it be done by the end of today, or could it continue for a couple of days?
I feel like it could continue for a couple of days. Going back to the column, basically in March, the U.S. long-short equity hedge funds, they haven't been doing very well. All the crowded trades that they piled into, these stocks got sold off the most. As we know, the stock market is doing a reflation trade and the value rotation, so on and so forth. So I think, some of his media picks, Viacom, CBS, and the Discovery, it's not just his picks. Other hedge funds were in it too, right? They might also get margin calls. So I think it would be interesting to see how it plays out.
All right, thank you so much, Shirley Ren, there, Bloomberg opinion columnist, with a great piece, of course, on what's been going on over the weekend and last Friday. Smart Conversations on Bloomberg Surveillance, the early edition. Later on in the program, we discuss more on the block trade selling story with Bloomberg Opinion's Elisa Martinuzzi. Before then, we discuss, though, how the Suez Canal blockage has affected the coffee trade with Andrea Illy, the chairman of Illy Café. Next, though, we speak to Barclays head of economics research, Christian Keller, about his global economic outlook. Get in touch, IB Plus TV, if you have any questions for him or anyone else on the program. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds on the global economic recovery.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Let's start in Europe. German Chancellor Angela Merkel is threatening to assert federal control over measures to tackle the pandemic. Under the country's federal system, leaders of the 16 states have direct authority over health and safety rules. But now the Chancellor may seek a new law to give Berlin even more powers. The quarrel over allegations of human rights abuses in China is growing. Beijing is bringing in retaliatory sanctions on individuals in both the US and Canada. The fallout is also now spreading to the corporate world. In some parts of China, landlords are closing H&M stores. This is after it put out a statement expressing concern over reports of forced labor in the Xinjiang region. And Myanmar has seen its deadliest weekend since the coup on the 1st of February. As of yesterday, at least 459 people have been killed since the violence begun, and over 2,500 have been detained. The military crackdown has drawn a strong condemnation from around the world. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the giant container ship blocking the Suez Canal has been refloated almost a week after it ran aground. Egypt says it aims to reopen the waterway today as more than 450 vessels are stuck in the logjam. Now, they say clearing the backlog of ships could actually take another week. Well, joining us now is Christian Keller, Barclays Head of Economics Research. Christian, thank you so much for joining us. We're all experts now in the Suez Canal and the operations and how you refloat. We're like engineers because of what we've been following since last Tuesday. On a serious note, is this transitory? Could it actually have more of an impact on trade and shipping longer term?
Well, yeah, that's something we didn't forecast in our outlook for certain, the Suez Canal issue. Look, it's the least that the world needed at this moment, I would say that, because if, as you know, there are already some bottlenecks. If we talk about containers, shipment prices for containers have been skyrocketing because there weren't enough containers around. And obviously events like this worsen the situation. I would say, however, this should be transitory. And, I know that there's a big backlog and it will have a big effect. But if we look at a, multi-quarter period, if we look at the rest of the year, I do think this is a transitory phenomenon. It may lead to further spikes in some prices, and people obviously focus on inflation, but it's not something that will derail the recovery that we are seeing in the coming quarters.
Christian, what kind of recovery will we see? Again, a lot, of course, depends on the price of oil. This could be something that, could have a blip. But does it change at all the trajectory of inflation, which seems to be higher inflation, but pretty short-lived, and then below expectations of central banks?
Look, the path that we see is certainly high inflation in the coming month. And I think what this could do, obviously, drive that spike that we're seeing further up. And that could have some impact as people, even though in principle one should look through the inflation that we're seeing in the next 3-4 months or so, markets will take note. And if these prints now reach, rates that are much higher than was expected, I could imagine that could have some impact, on the entire US yield curve. There will be some volatility. People will wonder, is that inflation really only going to be transitory, as we and most others predict? And so I do believe in a situation like this, where everyone is quite alert and sensitive about price moves, this event maybe could make bigger waves than it should. But again, these are transitory events. I would doubt that central banks react to it, including the Fed, obviously.
Christian, when you look at the recovery, what type of recovery will we see, and how quickly do we know whether it pans out as you need it to be? Is it vaccines rollout in Europe that will make a huge difference to almost also the health of the economy worldwide?
I mean, for now, Europe is clearly lagging, and it's lagging because it's so slow in the vaccine rollout. And so we haven't really penciled it in. What we do think is that Europe should catch up over the next 2 quarters. They will have more vaccines available starting in April, and they should catch up. What is leading the global rebound right now is the US and China, China has already been out of their recession for several quarters. They had a blip, so to say, last year. They're back. They've been strongly growing quite strongly. They actually may moderate in the coming quarters. But the biggest boost now in coming quarters should be coming from the US, given the very large fiscal stimulus that we're seeing. And that should really boost consumption in particular, given the nature of the fiscal impulse. And that will spill over into demand for countries, other regions, including Europe.
Christian, thank you so much. Christian Keller there of Barclays stays with us, and we'll talk a little bit more about what type of recovery Christian is expecting. Coming up, Boris Johnson unlocks England as Angela Merkel threatens to take control of Germany's COVID fight. What does this mean for European economies? Up next, we discuss Christian Keller's economic outlook. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
As things stand, I can see absolutely nothing in the data to dissuade me from continuing along our roadmap to freedom, unlocking our economy and getting back to the life we love. None of this would have been possible without the innovative genius and commercial might, and you know what I'm going to say, the might of the private sector, the free market economy. Because at the heart of this vaccine rollout, there is a huge and unmissable lesson about the need for private risk-taking, capitalist energy.
Well, that was Boris Johnson praising the role of the free market economy in the UK's coronavirus vaccine rollout. I have to say the Prime Minister, like many, cannot wait until hairdressers reopen on April 12th. Now, he was addressing Conservative activists at the party's local election campaign launch. This comes as England's stay-at-home COVID restrictions order comes to an end. Now, from today, 2 households or groups of up to 6 people are able to meet outside. Outdoor sports facilities, including tennis courts and golf courses, are also reopening. With the government urges caution, though, saying cases were up in Europe and variants threaten the vaccine rollout. Well, let's get back to Christian Keller of Barclays, who's still with us. Christian, the premise of the worldwide recovery, I think you believe basically it just depends on the U.S. Is there a danger that I don't know whether the stimulus goes astray or actually doesn't go to where it should be, and therefore the rest of the world is hurt by it, or because it's just so much of it, the stimulus, it doesn't matter really where it goes, it will help lift us out of this rut?
Well, I mean, it's led by the U.S. I think it's something that is wider than the U.S. As I said, China is playing a role, together with the U.S. They make up over 40% of the global economy, and China has already recovered. So I think they are the 2 leading forces, and then everyone will add. I mean, we just heard about the UK. When they open up, that should give a boost. What you say about the stimulus is interesting because there's 2 effects. The one is the one obviously on growth and demand, and that is something very optimistic for earnings of equity markets. But on the other hand, there is this question whether there could be another spillover, and that is obviously the spillover into inflation, and whether that could be something that is more than the moderate overshoot than the Fed hopes for. And if that happened, obviously we could see much more adjustment in the yields and in the bond markets, and that's something I think that is concerning investors obviously at the moment. We do believe it's transitory, as we said earlier, but it is so uncertain. We have never seen this type of a stimulus, the largesse of the stimulus, combined with the uncertainty about a post-COVID economy, how labor markets will react. And I think that just requires some risk premium, no matter what you think the outcome will be.
But Christian, so if there is a spillover effect actually on inflation, which is bigger than expected, which could also warrant a monetary policy move, if we get that sort of inflation, sticky inflation, higher inflation, where do you see it first?
I think what everyone is watching now, and obviously we have a non-farm payroll data later this week, is really the labor market. I think whatever we see in goods inflation in the coming month could be very high. We talked about the effect of the shipping containers, etc. But that will not have an effect on policymakers, in particular at the Fed. The Fed will focus on the labor market, and that will take some time, inevitably. So therefore, we are not concerned over the next few quarters. But if we talk about sticky inflation and the kind of maybe cost pressures and sustained inflation that the Fed looks for, we would see it in the labor market, whether unemployment falls faster than we expected, possibly the participation rate goes stronger, goes higher than expected, and we see wage growth that then should alert the Fed of there's something going on more than just a transitory push, that lifts good prices higher.
Christian, when you look at some of the things that we've been talking about, right, being, some of these hedge funds impacting the banks, it could be the U.S. 10-year yield and the move that we saw that was quite significant. Are markets seeing something that economists aren't?
I think markets generally realize that this has been an extremely supportive environment. We had a lot of liquidity being pumped into markets since the crisis broke out about a year ago. We see now that the prospects of the recovery has lifted valuations across the world, And I think that creates a certain nervousness. And, it started when we saw the yield curve in the US moving up and steepen because people suddenly thought, what would be the impact on inflation? But, beyond the macro, what I talk about, there are obviously a lot of other issues, positioning. We have events the entire time. There was Turkey 2 weeks ago. There's now, constitutional court decision by the German court that may delay the European Recovery Fund. And then we have the technical issues that you discussed earlier, where suddenly funds have to leave positions. And I do think that will lead to an environment where volatility may just remain higher because there's a certain nervousness in markets around the outlook that in principle is very good, but that has been priced to a large extent in many areas already.
Christian, what do you do with the emerging markets? Now, they're, of course, extremely reliant on dollar. They're extremely also reliant on what we see in terms of U.S. 10-year. Are structural reforms enough for you to want to buy into some of these emerging markets?
Emerging markets are indeed in a bit of a bind. First of all, they will benefit from the global growth spillover, and we think that should dominate because we believe that the steepening of the U.S. yield curve probably has run most of its course, and that should make emerging markets, not all of them. We call it pick your spots, but many of them should still look attractive because valuations have adjusted a lot over recent years. But as you say, they remain exposed should we see sudden, stronger increases in real yields in particular. That is, in a way, what deters investors going from emerging markets. If real yields in the US rise further.
Yeah. Christian Keller there, Barclays Head of Economics Research. Coming up, we talk coffee and Suez. This is Bloomberg.
To see an extremely strong year, and I think that strong year is going to lead to price pressure. I want to emphasize inflation's not a one-year phenomenon, it's a multi-year phenomenon.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Margin call. Bloomberg learns that Tiger Club Bill Hwang's family office was behind the unprecedented $20 billion moves in trades on Friday, while Credit Suisse slumps after saying it faces losses from an unnamed hedge fund client. Back afloat, the container ship blocking the Suez Canal has been refloated. Egypt says it hopes to have ships passing through the waterway again by today. Plus, Britain's lockdown measures ease today, with up to 6 people from 2 households allowed to meet outdoors. This as the country hits 30 million vaccinations. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on this Monday, 29th of March. I'm Francine Lacqua here in London. Now, the crisis in the Suez Canal could soon hit your instant coffee. The ship blockage isn't just restricting shipments of crude oil and liquefied natural gas, but also containers of Robusta coffee, the type used in Nescafe. Well, Europe is mostly affected as its imports through the Suez Canal, but the impact will be felt globally. Even as the Ever Given was refloated this morning, some are warning that supply disruptions could last weeks more. Well, Il Caffè is one of Italy's largest coffee roasters. The company is best known for premium coffee sold mainly in hotels, restaurants, and cafes. And joining us now is Andrea Illy, the Il Caffè chairman. Andrea Illy, as always, thank you so much for giving us a little bit of your time. I know you don't do instant coffee, so you're all about the fresh roasted one. But has what happened in Suez actually impacted the way you look at vessels? Is there a shortage of vessels that can bring your coffee to and from places? And what's the workaround?
Thank you, Francine. Yes, we don't use Robusta coffee, so we are not impacted. And then we buy the coffee directly from growers immediately after the crop. So we stock our coffee, and we don't have short-term crises as a consequence of Suez. The problem with containers that you mentioned was existing already before the Suez crisis. And there is a significant shortage of containers, which force us to pay 3-4 times more the containers in order to ensure shipments of finished product overseas. We are the most global coffee brand with a presence in over 140 countries, so we rely upon containers for the international shipment. However, thanks to our pressurization technology, which allows coffee to age like a precious wine, we can store the coffee. So our distributor typically have a couple of months of storage. So for the moment, we are not too much impacted by the crisis, but we have to be careful.
Do you have enough inventory in Europe, or are you having to pay traders to make sure that you have enough inventory in Europe to, weather any storm?
We do have enough inventory for the moment. The problem is shipping the coffee to overseas distributors in Asia, or particularly in Asia. But so far, so good. We managed finding containers, and I think in a couple of weeks the crisis will be over, and we will, worst case, we will ship by aircraft.
So, because you do source some of the Arabica coffee from East Africa, some of it which reaches Europe by Suez, would you ship that through aircraft, or would you be looking actually at other, other coffee to replace that?
This is not the season to source coffee, luckily. So this is why at the moment we are not in shortage. However, we store, we have a significant stock. We stock up to 1 year of supply, as a consequence of the direct sourcing system that we have, which allows us to source the coffee directly from growers immediately after the crop. So the crop season did not start yet, so we are not in the condition that we need to ship coffee in this very moment.
Andrea, you were just talking that you're also thinking of flying it. How much worse does, the Ever Given have on the container trade? How much of an impact will it have? Will it get much worse to what we've seen before?
I don't remember the figures in terms of costs, but for sure it's definitely more expensive, and also from the sustainability point of view, it would not be a reasonable solution, with the exception of really few days or weeks. It cannot be manageable
and it cannot be manageable. How overall is coffee demand looking like? So it's been a year since that first lockdown that we had. Is it getting better? Is it getting much better, or tentatively better?
Well, people typically consume the same amount of coffee. They just change the place where they consume it, from office and hospitality, from out of home into home. So there is a shift of channels with a significant boost in e-commerce because people source directly online, and the modern trade. So typically, it used to be 60% out of home and 40% home. Now the proportion is inverted. So we lost a lot of volume in the hospitality as a consequence of lockdown, and even in office spaces and in transportations, airlines and cruising. All these were locked down, so we lost volume, and which we have been able to partially recover in the home channel by boosting our distribution in the home channel.
So how are you expecting it to go going forward? Do you still, are you expecting the home channel to increase even more whilst the rest opens up? So does it mean a bigger revenue overall, or what are the kind of the dynamics that we should be thinking about?
I think it's reasonable to expect that the society will not be the same as used to be. We will work more remotely and then travel less. There will be a rebalance. However, we still will restart working in office spaces and traveling. So probably
I think we've just lost Mr. Andrea Illy. I hope we can get him back, because there were a couple of questions that we want to ask him about the North American expansion. We'll try and get him back, but that was Andrea Illy. Coming up, we'll also look at Credit Suisse slumping after saying it will see losses tied to an unnamed hedge fund client after Bloomberg reveals that Friday's bumper block trades were the work of Tiger Club Bill Huang. That's coming up shortly, and this is Bloomberg.
Friday, a Bloomberg Television exclusive, a conversation with Baidu co-founder and CEO Robin Li.
We're far from done. We will continue to invest for the next 10, 20 years.
Watch the full interview only on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight back to Andrea Illy, Illy Cafe chairman. Andrea, we lost you just when we were talking a little bit about how we'll consume our coffee in the future. So when we see a recovery, how will it change actually what you want to sell to whom? How will we consume and drink our coffee differently?
Yes, it's difficult to predict how the society will organize after COVID, but already before COVID, coffee consumption was ubiquitous. We were organized to serve coffee in hospitality, restaurants, hotels, office space, traveling, on the go with ready-to-drink coffee, home with different solutions, etc. So I would say the coffee industry is organized to intercept coffee consumption wherever it will be. With that, what used to be for our company, Illy Cafe, 60-40 ratio out of home, in home, will be probably something more 50-50. Because I think we will travel less for business purpose, and we also will go less often to office space for business, even though we will resume going to office space.
Andrea Illy, how is your North American expansion plan going? Are you still planning to open about 100 coffee shops, or does that change because of the pandemic?
This plan might be reconsidered in terms of numbers, because maybe 150 is not the exact number after COVID. We will see how much consumption will come back after the pandemic. But the plan is progressing as planned. We recently closed the deal with Rhone Capital, as I already anticipated at the signing here at your column. We are now on board and in the process of, the governance has been already reorganized with the entry of Rhone, and we are now entering in the planning phase of an acceleration plan for the United States, which is for sure centered about more digital, more and better single brand retail space as a touch point for the consumer, and increasing penetration in all channels. We recently inaugurated a new distributor, Amirati, in New York, which is the leading distribution company, also servicing the Italian Cimbalifima machine, which will allow us to penetrate more this particular segment. As you know, New York is a kind of leverage for the rest of the country, so the plan is progressing. We are reorganizing the company and set up and running.
Andrea, thank you so much. Andrea Illy, they're the Illy Cafe chairman, and of course I hope to have many interviews from Andrea to try and understand how this restructuring, repositioning, what it will lead to. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Hong Kong is said to be targeting its first SPAC listing by the end of the year. Sources tell Bloomberg it's expected to have its own blank check listing framework ready in June. It's racing with rival Singapore to become the first Asian hub to greenlight the investment vehicles. It plans tighter rules and are currently enforced over in the US. Now, video streaming service Bilibili is the latest US-traded Chinese firm to disappoint on its homecoming. Shares fell on its debut in Hong Kong amid a global sell-off in the country's tech shares. In his first interview with international media, the firm's CEO says he expects explosive growth in online video.
I think videalization will be a major trend of internet industry for the next 3 to 5 years. I believe all internet users will become video users. That means the market will be in ultra high-speed growth for the next several years.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the mystery behind Friday's $20 billion block trades is starting to unravel. Bloomberg has learned that the family office of former Tiger management trader Bill Hwang was behind the unprecedented selling. Archegos Capital Management was forced by banks, including Morgan Stanley and Goldman Sachs, to cash out its positions on companies ranging from Chinese tech giants to U.S. media conglomerates. Now, that sent shares in those companies slumping, with Viacom down more than 50% on the week, Tencent Music down by a third. This morning, banks from Credit Suisse to Nomura are also warning about significant losses, though they have refused to name a client. Well, joining us now to discuss this further is our Elisa Martinuzzi, our opinion columnist covering finance and really an expert on everything related to finance. Elisa, thank you for joining us. When you look at how much more pain we could see, it seems to be putting the spotlight on a lot of European banks. Is there more to unwind? Will we find out more on what exactly has been happening?
Yes, hi, Francine. I think it's a little bit it'd be dangerous to speculate at the moment. Just what we might see next. I mean, what we know is that there have been some very large unwinds. Some banks have come out and said that some of these unwinds are, some of these positions are going to be potentially costing them a material hit. Those being Credit Suisse and Nomura, and we've heard of other banks such as Morgan Stanley, Goldman Sachs, also having been active in the market, offloading these large stakes, but hinting that perhaps the hit is not material to them. I think that we still have quite a lot to learn. Which were the principal lenders to Archegos. For example, it's not obvious or certain that the ones offloading the largest stakes might have been the largest lenders. Maybe they weren't. Maybe they were hired because of their placing capacity. So I think we still have to learn quite a lot. But yes, it is possible, of course, that initial unwinds trigger other unwinds as the particular stocks take a hit.
So, Elisa, what do we know about some of the other? I mean, what you're saying is that basically it could have a snowball effect, but it's too soon to say. What would banks be thinking and doing today just to try and understand their exposure of what could happen next?
Absolutely, they'll try to understand their exposure to specific hedge funds, but also between banks. But I think at the moment, what we know is we have a limited snapshot into what has happened, which we think is, this one particular fund was facing margin calls because of a large move in Viacom stock. But what we don't know is, exactly the web of connections between the various parties. And I would caution from reading too much in what we have learned so far, because this business of lending to hedge funds is particularly secretive, and it'll take a while to understand exactly who is related to whom and in which fashion.
Has it changed from a couple of years ago, Elisa? It feels like, the banks maybe were very cautious, and then in recent months or years were a lot less cautious of who they would lend to. Would that be a fair assessment?
I think you raise a very valid point here, Francine. I mean, we didn't see this type of unwind, to the best of our knowledge, a year ago when markets were falling out of bed significantly, and we saw it, on the way up this year. I think what is extraordinary is, according to some reports, this investor Wang was sitting on the stakes of more than 10% in individual stocks through equity swaps. Now, if that is the case, then it certainly does beg the question, how is it possible that investors can still build up such large positions through leverage, through derivatives, without these positions being known? Because of course, these huge concentrations of what is behind these massive sell-offs now. And equally, what did the banks know? Did the banks know about the broader exposure that this individual fund had? And if they were aware of this, why did they feel so comfortable in extending that risk? I think, one thing that I've noticed just looking through, some of the recent filings is a lot of these banks were noting how strong their equity derivatives business had been in the fourth quarter. So it seems like there was an awful lot of more risk-on trades being put on that maybe have now backfired.
Elisa, thank you so much. Elisa Martinuzzi, there are opinion columnists covering finance. Now, her work and that of her colleagues, of course, available on OPIN Go on the terminal. You can also find it on our website. Now, back afloat, the container ship blocking the Suez Canal has been refloated. Egypt says it hopes to have ships passing through the waterway again by today. We'll have plenty more on that shortly. And this is Bloomberg.
80% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the giant container ship blocking the Suez Canal has been refloated almost a week after it ran aground. Egypt says it aims to reopen the waterway today as more than 450 vessels are stuck in the logjam. Now, they say that the plan to clear the backlog of ships by next Monday, but shipping company Euronav doubts that the recovery will be so rapid.
It's probably a little bit earlier than what we had expected. It seemed that the ship had been stuck on both ends, and indeed they've been able to move it, but it's a little bit too early to see when the canal is going to be cleared. So it's one thing to refloat the ship, it's another thing to completely clear the canal for traffic.
Well, joining us is Sigrid Nikuta, the DB Cargo Management Board member. Sigrid, thank you so much for joining us. When you look at some of the challenges, first of all, can you explain to us exactly what kind of cargo you transport from China to Europe using the Suez Canal?
Good morning from Berlin, Francis. Thank you for having me. So, DB Cargo, we connect 17 countries in Europe to all important economic centers in China. And we are twice as fast as a ship. Since the pandemic, we have seen a strong upward trend, especially on the new Silk Road. So we are a real existing alternative to the shipway, so rail. Yeah. Rail is one good mode of transport for goods from China, from the east to Europe.
To Europe. So, Sigrid, which companies have booked to use the train, and have you added more trains because of the Suez Canal blockage?
Yeah, we see a strong upward trend, and let me be clear. Of course, we can't transfer the containers from the Evergreen onto a train.
Of course.
Our customers do look for alternatives, and we have the alternatives. So all the big automotive companies, for example, are our customers on the land bridge. Because rail freight, and I speak not only for DB Cargo, but for the whole rail freight sector, rail freight creates resilient supply chains. And in situations like this, we see how important this is.
But Sigrid, can you give me an idea of how much capacity you've actually added? So how many more trains, how much more can you transport? And give us an idea of pricing. So does the Suez Canal blockage make the trains just as expensive, more expensive?
Okay, of course. Due to this situation, the prices rise, of course. But we have seen this price rise during the last months. We have seen that the containers get more and more expensive, but the transport way on rail freight is very competitive. During COVID, we have seen that trains can go through borders when roads were closed, and we see this at the moment when the seaway is closed. Trains can go on, of course. At the moment, we transport, let me say it from Germany, we transport around 12,000 trains to China per year. And at the moment, we are able to transport 3,000 more than in the last year.
Thank you so much, Sigrid Nikuta there, a DB Cargo Management Board member with, of course, very interesting logistic challenges surrounding trains from Europe to China. Now, we'll have plenty more, of course, on the big story of the day. I'm also looking at some of the European banks. So let's look at what Credit Suisse is doing. I'm looking at Nomura and Credit Suisse, both plunging more than 14% after saying that they face potentially significant losses as some of the world's biggest banks tally their exposure to wrong-way bets by Archegos Capital Management. That, without a doubt, is the story of the day. So Bloomberg Surveillance Early Edition will continue talking about that. Matt Miller joins me out of Berlin. Kelly Lyons will be in New York, and we'll have a full global view of what happens to Wall Street as we anticipate a pretty volatile U.S. Open. This is Bloomberg.
The government has to sell a lot more debt. That means they have to buy a lot more bonds. There will not be enough demand for those bonds. When that happens, interest rates rise. That's what you're seeing now.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
You see the price action and you wonder, okay, is this fundamentally driven or is this something else? And it seems like this is a big case of that something else.
I think it highlights the risks that people haven't seen on positioning, and it highlights the concentration in the market and also some of the leverage in the market, particularly the hedge funds. So we're going to have to be careful.
I would say if you're, your typical average investor, your retail investor, I would stay out of this for the next couple of days.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning from London, Berlin, and New York on this Monday, March 29th. Our top stories today. Brace yourselves. Traders are set for one of the most highly anticipated opens for U.S. stocks in months. Margin call. Well, meet the investor who rocked some of the world's biggest banks when he was forced to sell off $20 billion of stocks. And breakthrough at the Suez Canal. That stuck container ship has been partly refloated. Rescue crews say it's still too early to celebrate. There's quite a lot going on in the markets. I know Kaylee's all over the markets. Matt's looking at the repercussions overall of what this means for hedge funds and for European banks. We're looking at Nomura and Credit Suisse down some 14%. And Kaylee, we don't really know where this ends up because there could still be positions that have to be unwound.
Yeah, we don't know how far this thing could go, Francine, and I think to some extent that is what markets are bracing for here in the U.S. come the open in about 4.5 hours' time. But I would say this risk was largely shrugged off in the Asian session. Looking at Map Markets Go on the Bloomberg terminal, you can see that it was broadly green across Asia today. Your relative underperformer was the Hang Seng. It was basically flat on the day. Tech stocks creating a bit of a drag there, but the CSI 300 in China was higher, as well as Japan stocks really outperforming the Nikkei up by about 0.7%. But as you just mentioned, Francine, the focus really today was on one individual company, and that was Nomura, a record decline of 16% after the bank said it faces a potential loss from an unnamed U.S. client. People familiar with the matter telling Bloomberg that is related to Bill Wang and Archegos unwinding positions. Of course, in the European session, it is a bit more mixed. Some markets in the red, some markets in the green. One of those markets in the red is the FTSE 100 over in the UK, which is down about 0.4%, roughly flat in Germany and Paris, as well as for the broader Stoxx 600. The focus in Europe, though, similarly is on the banks. The Stoxx 600 bank index is down a full 1%, and a lot of that has to do with Credit Suisse, plunging 13% at this point after the bank warned of a potentially material loss to its first quarter results, resulting from an exiting of positions. A hedge fund client in the U.S., again, not naming anyone, but we can bet that that is fallout from this Bill Wang story. As for what's happening in the U.S., futures are pointing to a lower open. We're down about 0.6% on both S&P 500 E-minis and the NASDAQ 100 futures. As we see yields coming in about 2 basis points on the 10-year. We're right around 1.66% or so. Once again, maybe a bit of safe haven buying coming into the Treasury market. And we have to note oil is off the lows of the session. It's down only about 0.5% right now when it comes to WTI, as that ship is partially refloated in the Suez Canal, Matt, but we know that there is a long way to go until that full blockage really is clear, and that backlog especially is clear, Matt.
It's interesting that a ship can be partially refloated. You'd think that it's very binary. Either it's floating or it isn't floating, right? So I guess we have still a lot to sort through there. You do see some commodities, Kaylee, as you point out, rising. I saw iron ore continuing to rip as well. So probably we'll continue to see movement there, and the dollar, of course, rising. Let's take a look at what's ahead this week. England begins the next stage of its lockdown easing today. Remember, it's not the entire UK. Each one of the little sub-countries runs its own lockdown there. On Tuesday, German Chancellor Angela Merkel may hold a call with state leaders to lock down here even harder. And Bloomberg reported last night she may change a federal law or invoke a federal law in order to do that. On Wednesday, Joe Biden is expected to lay out more details of his long-term economic program. Build Back Better is, of course, the spin name for that, but it'll be an infrastructure bill. We're thinking around $3 trillion. Also on Wednesday, the World Trade Organization is scheduled to issue its annual trade growth forecast. OPEC and its allies hold their monthly output meeting on Thursday. And then Friday, it is, of course, a holiday, but not for the Bureau of Labor and Statistics. They will release the non-farm payrolls, the granddaddy, Francine, of all economic statistics.
Granddaddy, but markets are closed, so it's going to be quite an interesting Friday. Now, the mystery, and there's also April Fool's, so don't get caught up, right, Matt? The mystery behind Friday's $20 billion block trades starting to unravel. Now, Bloomberg has learned that the family office of former Tiger Management trader Bill Hwang was behind the unprecedented selling. I have to say, I haven't heard that name for quite some time. Archegos Capital Management was forced by banks, including Morgan Stanley and Goldman Sachs, to cash out its position on companies ranging from Chinese tech giants to U.S. media conglomerates. Well, Danny Berger is tracking the fallout. Danny, are we just at the beginning of the fallout? Because actually there could be many more. There could be many more positions that are unwound and hedge funds that are caught up into this.
Yeah, definitely. You'd have to imagine a lot of banks are exposed at this point. You have to remember that Bill Hwang was such an interesting client to Goldman, for example, that they took him back as a client despite the fact that years earlier he had pleaded guilty to wire fraud. Well, we've learned that both Nomura and Credit Suisse putting out statements this morning, as Kaylee mentioned before, saying that they might face losses from an unnamed U.S. hedge fund client. But for those brokerages who now have to face putting block trades into this market that didn't do what Goldman Sachs and Morgan Stanley did, that is, do this in a hurried fashion on Friday, this could be a much more difficult market to execute some of those trades in. We also have the pre-market look at Goldman and Morgan Stanley, despite Goldman telling its clients that it doesn't face any significant fallout from this, according to sources, those shares are still down. Now, in terms of some of those individual stocks that were hit, the fire sale was a lot of Chinese ADRs, a lot of U.S. communications and media type companies. Pre-market moves, some of those are still down. The question remains, do other hedge funds have similar exposure? Do they also have very leveraged exposures? If they do, they could certainly contribute to some of the selling we're seeing going on, Francine.
Danny, thank you so much. Our Danny Berger there with some of the fallout that we're watching. Now, for more on all of this, Bloomberg's Michael Moore joins us. He was for many years head of the U.S. finance team. Now he's in charge in Europe. But Michael, I imagine that what a lot of the banks are now going through is trying to figure out their exposure. How long would that take? Is it a matter of, do we know by the end of day today, or could it take many more days?
Well, I think it will be a process, and partly, as Danny mentioned, a process of how much are they able to unload, what marks are they comfortable taking on this. We've seen with Credit Suisse's statement saying it's too early to tell what the ultimate impact will be, but that it'll be significant. Nomura said that their exposure is as much as $2 billion, although that's certainly not the losses. But certainly a number of banks served as prime brokerages to the firm, and they'll be, we'll see which ones got out quickly and which ones are still having to manage the situation.
I wonder how much still has to be unwound, Michael. Typically, if you do a block trade on the down low, outside of market hours, you don't necessarily have to push prices that much. But apparently, some of this was done during the live session, and we really saw a huge move in the public markets related to these block trades.
Yeah, certainly. I think you saw an urgency on some of the banks here, and yes, I think the moves the positions were so big in these individual stocks that that perhaps there wasn't a way to do it quietly. So we'll see how much fallout there is from here, but certainly everyone on Wall Street is talking about this situation and looking at if there are broader impacts.
Well, and of course, Michael, a lot of Wall Street is looking at what the short-term moves could be, even come the U.S. Open in just a couple hours. But what about the longer-term implications of this? Could we see more regulation, perhaps, stemming from this episode?
Yeah, I think one of the big questions is, we've reported that some of the exposure that Archegos had was through swaps, and certainly that's a less transparent way of dealing and a way to enable more leverage. So you could see some fallout on that front. And then I think for each of the individual banks, certainly Credit Suisse talking about a significant hit here. They've also been involved in the Greensill saga. So certainly some questions about the risk management there. About a month after the CEO was saying they were ready to turn a new page on some of the risk issues they've had in the past. So, and then Nomura as well, with questions about how they were able to have such a large exposure to this fund. So I think, yes, both on the market regulation front and on the individual banks, there could be a lot of long-term effect here.
All right, Michael, thank you so much. Our head of finance here in Europe, Michael Moore. Now, coming up, James Ath, the Aberdeen Standard Investments Director, is tracking all the moves. I kind of lose my voice sometimes when there's big market swings. Now, after that, we'll also speak to former UK Trade Secretary Liam Fox. We'll discuss the impact of the Suez Canal blockage on global trade. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kelly Lines in New York. Now, I wanted to, Francine, just give everybody a quick update as to what's going on with the vaccines, because Angela Merkel said yesterday on ARD that she may invoke a federal law to take control and lock down tighter. That's because Germany just isn't coming through with the vaccines. If you take a look at this chart, 364 is one that we use quite a bit here on Bloomberg Television. For those listeners on radio, you can see that the UK is just trouncing all of the continental European countries in terms of vaccines here. The UK has administered 34 million doses, and that's across all of its kingdoms, I assume. Germany only 12.3 million, and it's not getting any faster, Francine, so this is a real concern for economic growth.
Yeah, it certainly is. Here in the UK, actually, we have a little bit more freedom, Matt. For the first time in ages, I think in 3 months, 2 households are allowed to see outside. It's pretty exciting. I know James Athey, who is in London with me, is also very excited by this. He's investment director at Aberdeen Standard Investments. James, we'll get onto vaccines in a second, but there's huge disparities on stock markets because of what we've seen with this block trading and some of the unwinding that we saw. How much volatility could we see in the next couple of days because of this?
I think you missed the more important point, Francine, which is we can get back on the golf course as of today. So I know for starters, my mum and dad are absolutely delighted about that.
Yeah, with all the time you have.
Could we say yeah, exactly. It's so difficult. These events, and we've had them before, you know, this shouldn't be new news. To me, these are symptomatic of financial markets which are not functioning appropriately, and with, you know, an interest rate environment which has not just encouraged but mandated highly levered, highly concentrated positions. But putting all that aside, it's always difficult to know. It normally takes some time for the bodies to float to the surface, for these things to percolate through the system, and for the full pain to be suffered. And obviously we don't really know what was in the portfolio, which is initially apparently gone pop. So we won't know, but there's always the potential for this to be a volatility event, if nothing else.
I mean, could this volatility event also infect credit? We saw already quite a lot of movement in credit over the last couple of weeks. Could this exacerbate it?
It could. You know, credit is just so much less liquid than equity markets that you tend to find that it doesn't react until it sort of has to, and until you get this raft of forced selling. So you can see some reasonable elasticity between equity markets and between credit markets, because once you sell out of credit markets, it's that much more difficult to get back in. So then normally they remain less volatile for a period, and then if the water behind the dam, you know, causes a break, then you can see that volatility spike dramatically. So I think we'd have to see significantly more weakness, volatility and pain in individual names, but in broad equity markets to see this spilling over into credit markets for now, I think.
Treasuries just had their worst quarter since 2016, or it looks like they're going to. What kind of window dressing could we see this week?
It's always a good question, isn't it? I never really know the answer. I think that given it's March quarter end, and that's Japanese year end, we do tend to expect there to be more window dressing than we do at potentially other quarter ends. But it's one of these games that we play in financial markets, you know, similar to supply events, known periods in the calendar where we expect there to be forced behavior. The game is to try and get in front of that, but the period over which you have to invest in front of the quarter end date in order to get in front of that flow obviously changes quarter by quarter. So we're expecting this big rebalance out of equities and into bonds. We're expecting banks to have to tidy up their balance sheets before snapshots at quarter end. But knowing exactly when that activity takes place is always near impossible. So again, into and out of the quarter end date, there is always the potential for volatility, but calling the direction right is incredibly difficult.
In the U.S., James, we're going to be watching things like consumer spending, which had a pretty weak February, to gauge whether or not the $1.9 trillion stimulus package we just passed is working. Do you expect that to bring back real growth and hence inflation?
So it's interesting, isn't it? Because we've seen this a couple of occasions now where stimulus checks have hit and you get a surge in spending and then you get a negative number the month afterwards. And to me, that's the model I'm working with at the moment, which is to say we're not talking about some permanent trend change in consumer behavior. We're talking about consumers who haven't been able to consume at the desired level or their desired mix of consumption. That is to say, they've been restricted in consuming sort of parochial face-to-face services. And it seems reasonable to expect that with money in the bank account and the freedom to go and consume these services that they've been unable to previously, that they will do so, and probably do so more than they would in any other normal week. But, to be really simplistic about this, if you normally eat one meal in a restaurant per week and you haven't been able to do that for a year, maybe you do go and have 2 or 3 or 4 meals out per week for a period. But in order for that to be self-sustaining and a trend change, and in order for that to contribute growth after that initial period, you'd have to then consume 5 meals the week following, which to me just doesn't seem to be the environment we're talking about here. So I'm expecting this spike higher in a lot of consumer activity, but ultimately I think that gives way to a return to the prevailing trend, which means some negative growth following that period.
So James, with all of that in mind, have we seen the near-term top in U.S. Treasury yields?
It's a really good question, Kaylee. I don't know. It feels to me like this battle which is going on between the equity markets and the bond markets first and foremost, but actually I think the US dollar is the most critical part of this. I would argue that a lot of the reflation trade so far has not truly been reflation. It has been this kind of cost push inflationary pressures, a lot of it coming from commodity prices, a lot of it coming from the weaker US dollar. When the dollar is strong, it changes that dynamic. It puts downward pressure on commodity prices. It puts downward pressure on a lot of the weaker emerging market FX markets, and suddenly it doesn't look like quite such a risk-on reflationary environment. And these things feed off each other, and then they are self-defeating. And I don't think we've found equilibrium yet. It looked to me like 175 was the first line in the sand. We've tried there twice and we've failed. I don't discount we could push on to 2% quite easily, but I think when we get to 2%, if we do get to 2%, I think the headwinds for yields at that point are much more material. And I think pushing on from that point is going to be much more difficult in this environment where it's really the US we're talking about. This is not a global reflation trade. Almost every other region is still struggling with inoculation, still struggling with massive output gaps, and increasingly struggling with higher inflation and weak economies, which is a nasty mix. So until the world is a bit more balanced, I don't think higher yields is an equilibrium.
Yeah, forget wanting to eat out. Have you, James, tried to actually book a restaurant outside in London? I mean, they're booked until like 2023.
That doesn't surprise me. No, I haven't. Thankfully, somebody was able to book us a local pub for the first 2 weekends after we're allowed to go back and sit outside a pub. So we've got things booked for the 17th and the 24th, and that wasn't too bad locally. But yeah, I haven't tried the flashy restaurants in central London yet.
Yeah, I've tried them all. I need a crew like James that actually books restaurants for me. James Athey, Investment Director at Aberdeen Standard Investments. Now, coming up, partially refloated, the ship blocking the Suez Canal makes progress. We'll discuss the impact on trade shortly. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Farrow. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London. Matt Miller in Berlin. Kaylee Lyons in New York. And let's get straight to the Bloomberg. First word news. It is the first step towards reopening the Suez Canal. But now the giant container ship that has been blocking the water has been partly refloated. The operation to free it completely is still ongoing. There's still no clarity on when the traffic in the canal can resume. There's a backlog of hundreds of ships. President Joe Biden will divide his next government spending push into two programs. Now, the president will outline a plan focused on infrastructure and jobs this week. A White House spokeswoman says the second proposal would focus on childcare and healthcare programs that will be released in April. And Germany's Chancellor Angela Merkel is picking a legal fight that underscores the gravity of the latest surge in coronavirus infections. Merkel is threatening to assert federal control over measures to stem the pandemic. Last week, she backed off a wide-ranging lockdown for the Easter holiday following widespread criticism. So much going on, and it's amazing, actually, Matt and Kaylee, how you see how the Germans are doing it differently to the UK. And yesterday, not yesterday, but 2 weeks ago, Angela Merkel really not being able to muster the leaders, right, the regional leaders to try and to go into lockdown again, Matt.
But she looks like she's going to try and pull out some legal cards to force that. Apparently, there are new regulations starting again this week about public transportation, but I don't do that. Kaylee, do they ride the subway now in New York?
They've been riding the subway the whole time, Matt, and actually they have more trains running now, so you can actually catch the subway at more hours of the day, but obviously very different to what's going on in Germany, Francine.
Yeah, coming up, bracing for fallout, what you need to look for in one of the most anticipated opens for U.S. stocks in months. This is Bloomberg.
We will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, there's quite a lot going on in the markets. That's probably the understatement of the year, as we're expecting one of the most U.S. volatile opens, or one of the most volatile opens in the U.S. Matt, we're looking, of course, at this massive unwinding, and it's now engulfing a lot of the European banks.
Yeah, absolutely. I mean, you had them start to come out very early this morning or very late last night and say, and tell us whether or not they had big exposure. Credit Suisse, just after it's already had to deal with other issues that have costed a lot of money, looks to have big exposure to this as well. You've got Japanese banks exposed, and it looks like the U.S. banks may have sold off in time. They kind of sparked the sell-off in general.
Yeah. Yeah, so Kaylee, we're seeing it on the markets.
Yeah, we absolutely are. Credit Suisse shares are absolutely plunging in the European session, though broadly Europe, when looking at the Stock 600, is holding on to a fractional gain, up just about 0.1%. Here in the U.S., though, as you said, Francine, a highly anticipated open coming in 4 hours' time, and ahead of that, futures are lower across the board, down about 0.6% on the S&P 500, off by 22 points or so at this point in time. Even as we see yields continue to come in, the 10-year yield is down about 2 basis points, 1.65% is where we sit. So it's shaping up to be more of a classic risk-off day where you see a safe haven play coming into bonds and also coming into the dollar, which is stronger today. That may be part of the story for oil, but broadly the story is more so what is happening in the Suez Canal. The Ever Given is partially refloated. Maybe that backlog going to start to clear today, but with that, oil prices are down about 0.7% when it comes to WTI. As for what is moving before the bell, I want to take a look at some of the stocks tied to Bill Hwang and Archegos Management and that massive margin call and unwinding that has been resulted as a result. Of course, Discovery plunged a record 27% on Friday due to a massive block trade. It is getting a small rebound in pre-market, up about 2 full percentage points. Excuse me. Of course, other stocks were the Chinese ADRs that were caught up this as well. Baidu is continuing its losses. It's down about 1.75%. And Matt, Francine, you were talking about the banks. Morgan Stanley and Goldman Sachs executed those block trades on Friday. Goldman says they aren't going to face any real material losses stemming from this Archegos issue, but nonetheless, both shares are lower by more than 3% in pre-market trading, Matt.
Yeah, it's interesting to see those moves. Certainly, U.S. banks are going to move differently than the European banks, Kaylee, that have bigger exposure. Archegos, as a word, is interesting. In Greek, I believe it means trailblazer or pioneers, but Jesus Christ said in Hebrews 2:11, it means the Archegos of life of whom God raised from the dead. So maybe it talks about the Christ itself. Apparently, Bill Hwang is a devout Christian. Let's see what happened to the stocks that Kaylee just showed you over the last week. Big drops. You heard James Athey mention GSX, Tech Edu, falling 55% over the week. Interesting, I think, Viacom down 50%, Discovery down 45.5%. Bill Sloan of S3 told me on Wednesday these were two of the most squeezable stocks of 40,000 different equities that S3 Partners looked at in a study. So big drops there as well. Tencent, Baidu, Farfetch, a lot of fallout, Francine, for a lot of stocks in this market.
Yeah, I love that history. I didn't know, Matt. I don't know whether it resurrects before Easter, but certainly something that markets, because of the mayhem that we've seen, are hoping to have a bit of the fallout unwind. Now, for more on the fallout from this massive unwind, we're joined by Bloomberg Wall Street reporter Sonali Bazak. Sonali, thank you so much for joining us. Is this just the beginning of this market mayhem? How much worse could it get? Because we don't really know who's tied into it, who lent to who, and actually who has margin calls on it.
Yeah, it's a great question, Francine. And the impact on the other banks is particularly interesting, given that you're seeing a real runoff effect that started with really Viacom looking to sell shares, really then putting more pressure at a small level on De Huang, which became a huge amount of pressure. You're seeing Nomura go so far as to cancel an issuance of U.S. denominated debt, $3.25 billion worth. And of course, Credit Suisse also plunging after also, dealing with the Greensill fallout as well. Goldman, of course, said it's not going to be taking, material losses on this. Morgan Stanley either. Potentially, but, you see what started with massive leverage brought on to this Tiger Cubs family office fund that started really with two of the biggest prime brokerages in the world. And of course, yes, it's something for, the scale of this alone should be concerning to a lot of people, along with this fallout in the multiple stocks that he was invested in, but also the firms that were exposed to him after kind of letting the reins off of how much leverage he brought on in more recent years.
The whole backstory, Sonali, is fascinating because Bill Wang came from I think he was an industrial trader and then won a contest to join up with Julian Robertson, one of the most famous investors of all time. Then when Tiger, the main fund, closed, he started Tiger Asia. He was very successful, then got busted for insider trading in 2012 and was persona non grata for the U.S. investment banks. Why did Goldman Sachs start to let him trade with them again? Apparently they had denied him for so long.
Yeah, it's a great question. According to reporting from my colleague Sri Natarajan, it's that they got more comfortable the more that time passed along. A lot of these trades had happened around the 2008-2009 period, and it's been almost a decade since they brought him on as a client again. Plus, Matt, we've seen this before, right? If clients get in trouble for insider trading, we have seen people be redeemed later on in their professional careers in family office form, right, where really a lot of the money they're responsible for is their own. Will that now be questioned a little more is the question. Again, this time around, it was mostly because of the leverage he took on, which is frankly something that I've been wondering, when would that kind of thing come to a head? We know a lot of the leverage in this time around is outside of the banking system.
Well, yeah, to that point, Sonali, this is not the only fund that is heavily leveraged. This is not the only fund that had exposure to this kind of group of stocks. Does this signal that more pain is coming, that this is going to extend far beyond Archegos?
There's this question about a year ago, or a little more than a year ago now, too, with leverage and a different set of securities in treasuries alone. So when it came to basis trading, some firms were levered 100 to 1, my sources were telling me. So, the question of how much leverage funds are taking on, we know it's something that may come to the forefront when it comes to Biden-era regulators, FSOC under the age of Janet Yellen. I would imagine that because it's a sell-off of this magnitude, it's huge for a firm that most people don't talk about most days, right? So I would imagine that regulators in particular, take a very close look at this, given now you're seeing not only a sell-off in stocks, but sell-off in banks that are even closely related to these firms.
Sonali, thanks so much. Bloomberg, Sonali Bazak there, looking at some of the fallout and some of the implications for the market mayhem. Now, coming up next on the trade routes affected by the Suez Canal blockage, we speak with the former UK Trade Secretary, Liam Fox. There's also a headline that we saw over the weekend saying the priority for Biden's administration may not be a trade deal with the UK. So we'll talk about that next. This is Bloomberg.
people expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
Inflation, currently below 2% now, is not going to be below 2% in the next few months. I see a 3 to 4% number ahead of us.
Probably a little bit earlier than what we had expected. It seemed that the ship had been stuck on both ends, and indeed they've been able to move it, but it's a little bit too early to see when the canal is going to be cleared. So it's one thing to refloat the ship, it's another thing to completely clear the canal for traffic.
Well, that was a Euronav Chief Executive Hugo de Staaf speaking to Bloomberg a little bit earlier. Now, almost a week after it ran aground, the giant container ship blocking the Suez Canal has been refloated. Egypt is aiming to reopen the waterway today, but they say clearing the backlog of ships could take around a week. Well, joining us now is Liam Fox. He's UK Conservative MP and former UK Secretary of State for International Trade. Liam Fox, thank you so much for joining us. If you look at the state of global trade, it's already been changed because of supply chain issues. It's been changed, of course, because some of the shipping costs were up. Is this something that will be short-lived, or does Suez actually change the way we'll ship things? Are we going to see more trains, for example, or air freight?
Well, what it is part of a regular little reminder that there are vulnerabilities in the trading system. With 25% of global container traffic going through the Suez Canal, 9% of global oil, any disruption there clearly will have an impact on global trade, but you've got a similar position with vulnerabilities in the Strait of Hormuz, the Malacca Strait, and potentially the South China Sea, all different factors depending on different actors, some potentially threatened by state action, by Iran or China, or by terrorist action. And we've had these warnings, haven't we, about the disruption in the global supply chain with the pandemic. It just gives us an idea that we have fragilities as well as strengths in the global trading system. And what we need is diversity. It's the key to ensuring continuity of trade.
Right. We also have ship shortages, tongue twister, around the world, which is impacting a lot of industries. What does it mean for the UK?
Well, it means probably for the UK, where a great deal of our trade goes by sea, we've not seen any great disruption in that, although we have seen some delays in shipments from China in recent times. But I think that we will all, as a global community, have to recognize that global problems require global solutions. We've had a lot of warnings about the vulnerability of the globalized era. We had it from the financial crisis in 2008-9. We've had it from the pandemic. We get little reminders like this one about the pinch points in the global economy. And therefore, we need to recognize that we need to work together. I mean, it's not rocket science to say that global problems probably require global solutions.
I want to ask about the lockdown or the easing thereof. For our international viewers, you are a medical doctor yourself. Do you think this lockdown is too fast, or I mean, the easing of the lockdown too fast or too slow?
Well, I think that it needs to be done on the basis of data and not dates. And I think there's always been a problem with the wish of politicians to see naturally conditions lifted more quickly. Yeah, we need to do it in line with the data. Of course, the data in the UK is very good at the present time because of the success of our vaccine program with more than 30 million UK adults already vaccinated. That is undoubtedly contributing to the big drop we've seen in cases, in hospitalizations, and in deaths. And I think that from a business point of view, rather than a political point of view, it's essential that this is not reversed. And I think that the government will therefore err on the side of caution as we go into the easing of this process, because especially in a lot of the UK service industries, the hospitality industry, for example, the worst thing for them is to come out of lockdown and then go back into it with all the implications that has for stocks. Right. So I think you'll see a gradual easing in the UK. Perhaps there's a new problem emerging for us, which is the UK may find that because of the success of the vaccine program, we've got very low numbers in the UK, but where do we go?
Where do you go? I mean, have you thought about taking a vacation on foreign soil this year? Is that a possibility for the Fox family?
Yes, it is. And of course, where we have immunizations, we're much less likely to be infected elsewhere. The problem will be what might we bring back to the UK and what will the quarantine issues look like then. Ultimately, if you look at it from a medical point of view, when you introduce a new pathogen into a population, there are only three real outcomes. Either the population gains immunity from wider and more widespread infections, or it gains immunity through immunization, or the virus changes and loses lethality or transmissibility. And it looks as though the vaccine is the main part of that. And I think that the UK example of thinking ahead, of working out that we needed a better vaccine technology, which we've been working on for some time, has been key. And I think that but to go back to this global perspective, if we're going to deal with a future pandemic, and there will be future pandemics, in a less shambolic way than we have with this one, we need to start to have better cooperation. We need to look at global protocols, but to have global protocols, we need to have global metrics. At the moment, we can't even all measure our death rates in the same way. We are a very long way from the global cooperation that we will require to efficiently deal with any future pandemic, a very long way indeed.
Liam, on the subject of global cooperation, this is Kaylee speaking to you from New York. Here in the U.S., President Joe Biden has outlined what his priorities are, and a trade deal with the U.K. doesn't really seem to be very high on the list. And Bloomberg reported last week that a U.S.-U.K. trade deal may not come until 2023. Is that too far away?
No, it's not too far away. There's the value of a UK-US trade deal, I think, is more symbolic and more political than it is economic. I think that the best thing that we could be doing together is to be working on attempts to get liberalization of global services. I think one of the biggest problems for the big service economies, like UK or the US or Japan, for example, is that we've not liberalized global services to anything like the extent that we've liberalized goods. And therefore, a lot of the value in our economies is locked down. And when you consider that in the developing world, there will be a real need for the services which, if you like, are stocked high on the shelves of our economies, and legal services, financial services, insurance, life sciences, and so on, liberalization of services would be a big boost. And in the US-UK context,
Liam Fox,
the federal government doesn't have the authority to negotiate those service agreements.
Right. But 2023 is a disappointment. It can't not be a disappointment to you, given that we heard from the Biden administration through our sources that actually they're going to prioritize other relationships, including the one with China.
Well, that doesn't, of course, in my view, rule out a trade agreement. We're quite close to one. If we get it, it's great. But there are other things which I think are priorities. In terms of unlocking the global economy, of course, getting multilateral agreements is the best thing. The next best thing would be open plurilateral agreements, then regional trade agreements, and bilateral FTAs, I think, are what we get now when we can't get trade liberalization by other means. But of course, in terms of service liberalization, You always have the possibility of the UK looking at trade agreements with some of the big US states, California, Florida, Texas, New York, for example, would all be in the G20, where the independent states. So the amount of liberalization in services that can be achieved by agreements there would be quite considerable. So it's not by any means a two-dimensional picture.
All right, thank you so much. Very patient. Liam Foxler, UK Conservative MP and former UK Secretary of State for International Trade. Now, a little bit later today, we also continue the conversation on trade with Guy Platten. He is International Chamber of Shipping Secretary General. He'll have a thing or two to say about Suez now to unstock a vessel. That's at 1 p.m. in New York, 6 p.m. in London, and this is Bloomberg.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
You see the price action and you wonder, okay, is this fundamentally driven or is this something else? And it seems like this is a big case of that something else.
I think it highlights the risks that people haven't seen on positioning, and it highlights the concentration in the market and also some of the leverage in the market, particularly the hedge funds. So we're going to have to be careful.
You might see some either copycat moves by some funds on a similar basis, but I certainly we don't feel that we're at an inflection point at this stage.
I would say if you're, your typical average investor, your retail investor, I would stay out of this for the next couple of days.
Some of the market reaction there following an extraordinary $20 billion wave of block trades Friday that rattled investors worldwide. Well, Tom Keene, co-anchor of Bloomberg Surveillance, now joins us. Tom, first of all, we need to talk about the beard. You haven't shaven it. What is it, like lockdown? Barbers are closed and you're waiting for them to
Yeah, I was on a 3-hour tour. Matt Miller and I were going off on Gilligan's Island here. Francine, you don't know Gilligan's Island, but it was a 3-hour tour. I survived with the actress.
Right, and you were so actually engrossed in what's happening with Credit Suisse and block trading that you forgot to shave.
Everybody up on Global Wall Street was up early in New York. This is a huge deal, Francine, with Morgan Stanley and Goldman Sachs down about 3%-ish right now, maybe 4%. Yeah. We haven't really heard from Morgan Stanley yet. We're all waiting for that. Here's a chart of the damage done. Thank you, Neil Young. And it's Viacom. And it's real simple. This is the long-term trend of the mediocrity of Viacom CBS. And the huge spike, Francine, is the excitement over Paramount Plus and streaming, and then the big pullback where the margin calls began to click in.
Yeah, I mean, I was looking at Credit Suisse. It was down some 13 to 14% earlier, and we're still trying to figure out, who else could fall or who else could actually need to take a big position on it. Tom, I think the question is also, why did we not see this, right, 12 months ago when there was such huge market swings, and why are we seeing it now, complete black swan event?
It's one of the themes John and I are going to talk about here with a sterling group of guests. The real question here, Francine, is why are we doing this every 8 years or 9 years as well? Srinath will join us. Of course, he's led our coverage on Goldman Sachs. He's been on this story all through the weekend. We are thrilled to have Gerard Cassidy with us today. He's the only one breathing who remembers continental Illinois. You got to have Gerard Cassidy on a day like this, and Seb Galley will look at the rest of the markets as well.
Yeah, and Sridhar, really instrumental, actually, was also breaking the story. Tom Keene, thank you, co-anchor there at Bloomberg Surveillance. You can watch Tom, John, and Lisa shortly. Now, this is what else we're watching today. And Kaylee, basketball.
Basketball, March Madness, the Elite Eight starts tonight, Francine, and you, Francine Lacqua, are still in first place in the TV Newser bracket. I am so impressed. I'm impressed with you every day, but especially because of this. You are in number one, Francine. I am in a lowly 32nd place out of 33.
How on earth?
So clearly Francine is way better at this than I am.
It's because I have no emotional attachment. How? So because no emotional attachments means you look at the odds.
I think that's probably right. I chose Ohio State to go all the way, the Ohio State University, and of course. That's not really working out too well. Francine, I'm watching the Suez Canal. I'm looking for a live stream. If somebody has a live stream of the Ever Given, please send it to me.
I think I saw someone on Twitter, actually. I'm looking at Credit Suisse with some of the CoCo debt issued by Credit Suisse also falling the most since November. So, of course, the fallout continues as we try and figure out who will lose the most and where. We are expecting a very volatile open in the U.S., so we'll look at that as well. Coming up in the next hour, Sebastian Galley from Nordea Asset Management, Senior Macro Strategist. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
To be conscious of the fact that the vaccine alone and the COVID story alone does not tell the whole story.
We need to get the economy to recover. We need to get the economy to heal with minimal scarring.
The downside, of course, is higher interest rates, higher inflation, and that's really taken some of the steam and froth out of markets.
People are pricing in success for the Fed in terms of achieving the inflation target.
If we do start to see inflation rise in the United States, there's a very good chance that could be exported elsewhere as well.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is the mother of all margin calls from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Farrow. Lisa Abramowitz out today. Equity futures down 0.4%. Tom Keene, this is not your average tap on a shoulder.
Not at all. And John, through the weekend, and most of us was a sleepless Sunday night as this really began to unfold Thursday. John, what I would really focus on here is the word unprecedented. Somebody was out within the media saying it was unprecedented. John, it is unprecedented.
And still so much we don't know, Tom. The assets under management of Bill Hwang could be anything from 5 to 10 billion coming into this mess. The position size, we've got estimates out there of anything up to $50 billion. We still don't know a fair bit. And Tom, also, what's left to unwind?
And what we're going to do, John, is go through surveillance this morning with experts that will give us their perspective on all of this. And John, it really goes back to that phrase margin call. There's a point where the game is over. The brokers call up and say, let's go, and you can't.
And you can't. And we started to see those huge block trades come through in Friday's session. And now we know over the weekend who it is, Tom. We'll talk a whole lot more about this through this morning. Let's just start with a price action, Tom, this morning. Get through things, get a feel for where we are. Equity futures look like this on the S&P 500, coming down about 16 points, down 0.4%. Into the bond market, bit of a bid, yields in 2 basis points to 165.49. Tom, what's interesting to me is we're talking a lot about the long side of this book over at Archegos and what had to be unwound on Friday's session. What we haven't talked about is what was on the short side and what also had to be covered because there was a monster ramp into the close on Friday's session on the benchmark. And I think a lot of people are looking at that now and tying it back to Archegos too.
Yeah, well said. And I would say, John, the real note for me was the Sunday note that Morgan Stanley has a big block of Viacom out there that they're trying to unload. These are the mystery things, John. Little headlines out in the Bloomberg and other media sources. People are familiar and all. And what I really want to do, John, this morning is lose hysteria, but you are right to look at both sides of this given mess, the long side believing you're going to go up and the short side. John, this is not GameStop.
It is not. It's much bigger than that. Let's bring in Marcus Ashworth this morning, Bloomberg opinion columnist. Marcus, can we start with what we still don't know about the events of the past week?
Yeah, I think in some senses this is a bit linked to GameStop in the context that I remember this particular player in 06, 07 where I was in Japan in Japanese equities, came out of nowhere, all of a sudden became pretty much our biggest client, and then, obviously Lehman happened and a lot of hedge funds disappeared, should we say. But, it was the size, the scale, and I think this is what the GameStop sort of ethos here is that there's a chance to squeeze short sellers, which is still going on. And I think this player obviously felt he had some leverage, and that leverage slipped away from him, perhaps with the share placement, which I think took came too big in for him. And obviously we've had certain of the prime brokers just literally hit the red sell button and get out as quick as. And there's clearly more to come out of this, and it's evidently that this is going to spill out for the next few days.
Marcus,
and the SEC needs to do something.
Marcus, I know Jeremy Irons played you in Margin Call. Let's bring up the famous quote from the wonderful actor in Margin Call here on the reality. Maybe you could tell me what is going on, and please speak to me as you might to a young child or a golden retriever. It wasn't brains that brought me here, I assure you of that. Marcus, explain to our audience what a total return swap is, where the hedge fund doesn't own the stock but gets the upside. How do they get away with that?
Well, I mean, a lot of these structured trades are done simply because it's an efficient way of essentially you're taking the index risk, which is clearly what was bought back in the close on Friday, as so you're taking away market overall up and down of the S&P, should we say, as one side of the trade, short, and then long you've got individual shares in creating your own basket, which is your longs and you think are going to outperform. Now, you can structure this in a way which enables essentially leverage to be put on it in a much more sophisticated fashion and clean, so you can exit trades or go into the trades in a basket fashion, which has become very much the way the business is done in large-scale blocks anyway from now on. So you have, in essence, the positions are held by the bank in large scale. Of course, we're using several different prime brokerages, i.e. level several different banks.
Yeah.
He's been able to hide the true nature and size of his overall positions.
Well explained. And John, what is so important here is the underlying is the given hedge fund doesn't want people to know how much of the stock they own. They're way out over, say, a 5% level.
That's the good point here. And Marcus, how did they do that? We've heard a lot about swaps this morning. Can you walk us through that?
Well, I think there's I believe, I might be 100% sure on this myself, but there's a 45-day reporting period, and I think that's clearly where we've perhaps the spirit has been broken, if not the letter of any laws here. So, as I said, that's why I think the SEC needs to be able to fully understand. Each prime broker knows exactly what it has on its own books. These are OTC trades. They're done, via them, and they are fully in control of their own little world with this client. Where the problem here is you've got very large exposure across a whole raft of basically the entire industry of prime brokerage, and this guy's obviously playing a lot of fees, and he becomes more important, and it's very hard to turn down extra business. And I think that is where perhaps we need to look at however someone like this can build up such a large scale, whereby the non-reporting or delayed reporting, because it's done either held by a bank and not him, or indeed has 45 days, is clearly not sufficient.
So, Marcus, just quickly before we let you go, just in terms of how each and every individual bank has dealt with this over the last several days, the losses that we're likely to see at Nomura and Credit Suisse, which could be, quote, significant, is there something about the way they handled all of this over the last couple of days that has led to that, or something about the position before we came into this mess?
I think it's a combination of everything. I mean, clearly, certain prime brokerages have reacted quicker and have obviously obliterated some of the stocks, which has left perhaps the more cautious ones or ones still trying to work out exactly what their exposure is, left behind. Clearly, there are outstanding positions, and this is going to reverberate for several more days, I fear.
Credit Suisse down by more than 13% over in trading over in Switzerland. Marcus, great to catch up. Stay close, won't you? Marcus Ashworth there of Bloomberg Opinion. Let's keep this conversation moving with Seb Galley of Nordea Asset Management and Senior Macro Strategist. Seb, if we can just sit on this just for a moment, is there something happening here more broadly, or would you call this idiosyncratic? I know it's early to throw around the I word, but would you call it idiosyncratic, or is there something bigger happening here, Seb?
It's idiosyncratic, but it's probably more complex than it seems. And that's what you discover every time we have one of these crises, is that we don't understand the interlinkages. For example, prime brokerage of Citigroup or of Goldman Sachs are prime ones, but everybody else is competing against them to get business. And it means there less requirement on collateral, less requirement on risk management, and that means they're much more exposed. So some of them have come out, and some of them may not yet have come out to explain what the risk management solution has been. So it could still, in the next few hours, get more information from other parties.
Seb, I do wonder from your perspective whether we're spending too much time trying to come up with pretty neat narratives to go with huge moves in equity markets, when the underlying good story could be exactly what we've been discussing for the first 8 minutes of this program.
Yeah, and the problem, of course, is that this is the domain of rumors, because somebody knows this and is not supposed to transmit the information except to the wide media and everybody else concerned. And it goes through WhatsApp application, transmits itself through the entire industries very slowly and very rapidly also. And it's quite unfortunate, and it's something that hasn't been hit yet.
Seb, we study this up, down, and sideways. We can get fancy about receiver and payer and swap this and swaption that. Does this margin call suggest to you that government will finally have to step in and say, what's the value of this derivative strategy?
Well, the value of the derivative strategy is measured by the prime brokerage, and the prime brokerage then set the margins. The margins are a function of volatility and stress tests, and it means that the risk management of these various parties is inadequate, either because they act alone or because they act in ignorance of what's happening with other prime brokerage. And therefore, the question is whether the risk management models used by the prime brokerage are sufficient and their stress testing is sufficient. Right. And obviously, the stress testing isn't.
Would you suggest there are other hedge funds out here besides this singular event starting Thursday?
That I don't know. I have no idea. I have no.
How did he get on, John? How can he give us an answer like that?
I think that's a sensible answer that keeps him out of trouble. Come on. Seb, we've got to let you go. Sebastian Galli, Nordea Asset Management Senior Macro Strategist.
That was great.
Avoided an important question that I think maybe he should avoid. If the PR was watching that one, Tom, they'd be happy. Got to talk about the banks, Tom. Got to talk about the banks, not just over here in the United States, but over in Europe too. Credit Suisse, not looking good, down 13% in Swiss trading.
I mean, you really got to focus, John, on you wake up on a Wednesday and you think you got the year set, and then all of a sudden it evaporates. In the case of Nomura, which we've barely touched on in Tokyo, I think it's 6 months evaporates. Maybe it's a year of profits that are supposedly recovering at Credit Suisse. This is the idea that you're fine, and then you're not, John. And I'll tell you, the weekend, and we haven't heard from Morgan Stanley. I am most interested in how Mr. Gorman and his team handled this trading event.
I'm looking forward to catching up with Jared Cassidy of RBC. We'll do that in about 20 minutes. So, Tom, this is the big story for us this morning. We've also got to push ahead to Payrolls Friday. Have you seen the estimates out there at the moment? B of A, over at 1 million. Looking for 1 million at the top end. I think 650,000 in and around is the median estimate. We could have a big week for payrolls. We've just come off the back of a Friday where we've delivered more than 3 million vaccinations in America. There's some stunning data out there we need to look at too.
And John, there's great data out there, but also there's just the anecdote of it, and including my travels. I mean, you know, you go to the Motel 6 out of LAX, and you can really feel
Hey, Tom,
the pulse.
We're 11 minutes in. Did you think I was going to let this go? Where has this come from? Where has the beard come from?
The beard, it's there.
Is it staying?
And you know, there's a heated battle here. Right now, we're up to 23 yes. There's one person who says lose the beard, and we'll be monitored. We got a bank of phone people. Our interns have come in today to take the phone calls early, folks, on radio and on television.
Let me tell you, if you've still got that beard tomorrow morning, I'll go the whole week without a tie, all right? If that beard's still there tomorrow morning, but I guarantee management pulls you to one side a little bit later and says, that's got to go.
You know, what do you think?
I like it. I'm a fan. I'm a fan. I like it.
Mrs. Keene said, you're no Wolf Blitzer. That's what she said.
That is true, too. Coming up, 7 a.m. Eastern Time, Krishna Mamani, Lafayette College CIO. Your equity market down 0.4% on the S&P. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It's the first step towards reopening the Suez Canal. The giant container ship that's been blocking the water has been partly refloated. The operation to free it completely is still going on. There's no clarity on when traffic in the canal can resume. There's a backlog of hundreds of ships. President Biden will divide his next government spending push into 2 programs. The president will outline a plan focused on infrastructure and jobs this week. A White House spokeswoman says the second proposal would focus on childcare and healthcare programs. That will be released in April. In Myanmar, it was the deadliest weekend yet since the military coup in February. Dozens of protesters were killed in battles with the military and the police. One human rights group says at least 114 people died on Saturday, including some who weren't taking part in demonstrations. That's drawn condemnation from governments around the world. And Germany's Chancellor Angela Merkel is picking a legal fight that underscores the gravity of the latest surge in coronavirus infections. Merkel is threatening to assert federal control over measures to stem the pandemic. Last week, she backed off a wide-ranging lockdown from the Easter holidays following widespread criticism. London and New York are beating Asian finance hubs in the race to vaccinate. About 30% of London's population has had one dose. That's compared to 23% of residents in New York.